Welcome back to the Real Estate Scoop, sponsored by Living Spaces Midwest. If you're in the market to buy or refinance a home, you're already aware of the fact that mortgage rates have doubled in the last 2 years. And with every percentage point carrying significant long-term cost, it's never been more important to ask the right questions when talking to a lender. Let's talk about what to ask, but also the most powerful question that could save you thousands of dollars over the life of your loan. But first, let's start with the basics, because even those can make a huge difference. Before you even talk rates, ask your lender if you qualify for special programs like the first-time homebuyer programs. These often come with lower down payment requirements or reduced interest rates. There are also the FHA loan programs, which are a great option, and if you are looking at that fixer-upper, make sure you know about the FHA rehab mortgage products. For vets, there is a VA loan option, which is a great choice, especially because there is no down payment required. And if you are looking for something rural, make sure you know about the USDA loan products. It's imperative you work with a lender that knows about these programs and has access to the loan product that works best for you. And now we come to a critical point of your mortgage loan, and that is the interest rate. What most borrowers don't realize is that not all rate quotes are created equal, even if your credit, income, and down payment are the same. Why? Because lenders don't just pull your rate from thin air. They base it on something called the par rate. Let's discuss par rate and understand what it is and how it is tied to your interest rate, and most importantly, how it can save you thousands of dollars. What is the par rate? The par rate is essentially your lender's wholesale cost for a loan. It's the break-even rate, the one where they make no profit on the interest rate itself. But, and here's the kicker, lenders are not required to offer you the par rate. They often quote a rate above the par rate, building in a margin called the yield spread premium. That margin equals lender profit. Before locking into your interest rate, there is an important question to address with your lender that could potentially save you thousands of dollars. The question is, what is the par rate? Even a 0.25% markup, which sounds small, can make a huge difference. A real-world example, the power of 0.25%. Let's say today's par rate for your loan is 5%. But you're quoted 5.25%. That doesn't sound outrageous, right? But on a $300,000 loan, that extra 0.25% equals about $95 more per month. Over a 30-year loan, that's over $34,000 in extra interest. Lenders work hard to get you pre-approved to buy a home, and they deserve to get paid, but there's a big difference from company to company as to how much they are getting paid. Like realtors, commissions get split, and the structures of commissions themselves are changing greatly, as we have all learned over the past year. Lenders can charge origination fees, processing fees, review fees, as well as their potential yield spread, which again is the difference from the PR rate they are getting and what they've charged you, the borrower. Are fees negotiable? Some are and some aren't. The third-party fees like appraisals are set and cannot be negotiated or waived, but a good lender won't shy away from those questions. In fact, they'll welcome them. Their job isn't just to hand you a loan, it's to guide you through one of the biggest financial decisions of your life. Don't be afraid to ask the questions. What is the par rate today? Are you willing to pass that on to me? Your lender may give you the par rate, or may be able to negotiate better terms as far as closing costs. It costs nothing to ask, and a professional lender should never be offended by those questions. Like real estate and the huge transformations in commission, let's be honest, people are trying to save money wherever they can. Housing prices are high and interest rates are struggling to keep below 7%. A good lender working for you will be your lender for life, the par rate. It's good to understand what it is and how it will affect your monthly payment. Knowledge is power with regard to the biggest purchase you will probably ever make. Thanks for stopping into the Real Estate Scoop.